Welcome back, folks. I am Jon Najarian, and you're tuned into 3 at 3 p.m. Eastern Time. We deliver what we have coined the phrase unusual activity for what I'm about to show you. This is a combination of calls, which would be bullish, or puts, which would be bearish. And when we see that happening in the markets, we coattail on those very large trades and try to, of course, ride them for big profits. Doesn't always work. It's very, very accurate, but nonetheless, you, and yes, I'm pointing at you, have to be disciplined about taking profits and taking losses. So if you're somebody who has that discipline, this can be a fabulous way to trade, because you do have to cut the losses when they occur, and you do have to take profits when you have them. You don't let it just bounce around like a pinball. You have to actually have a little responsibility in the process. But as you'll soon see, these readings can be very accurate and pretty lucrative. So let's get started with today's 3 at 3 for Valentine's Day 2023, which includes this. Husband asking his wife, what would she like for Valentine's Day? And the wife says, a new husband. But she'll settle for roses. All right. Now that we've got that out of the way, let's talk about this. Upstart. Bullish call buying. The stock is just over $17 a share. You see that. What were they doing? They were buying 1.8 million share equivalent of the February 19 calls. So what do you need to know? Let's say you're brand new to this. Number one, 18,000 options, since every option is for 100 shares, means 1.8 million share equivalent. That's a big trade. The other thing you need to pay attention to is these calls expire Friday. So why do you get to control 1.8 million shares between now and Friday? Well, you're paying a premium for that. All of it is extrinsic, meaning it's out of the money. Approximately $1 to $1.25, call it $1.10, $1.15, wherever you end up getting in. That is a trade-off for time. You don't have a lot of time to be right. So if you're somebody who has not traded before, this might be something that is a little deep end of the pool for you, and you should hold on for something that gives you a little more time. For those of us who trade actively, this is a great opportunity to buy an at the money, 17, strike call, and then sell calls as we rally. Is there a guarantee? Of course not. But when somebody buys 1.8 million shares in a company, is that interesting to you? Because it is to me, and that's why I jumped on this one. There's my brother Pete and I. You can always follow us on Twitter. Pete's just Pete Najarian, and I am John with no H. My dad was with the H. Very proud of him, but he named me using the Swedish spelling for Jon, John. All right. Let's take a look at this. NTNX. NTNX, $29.34 is where the stock was. 5,000 of the April 3250 calls. So these calls are approximately $3 above where the stock is trading. All right. Could we get there by April? Sure. Could we see a pop between now and then? Yeah. And that's what we root for, because options move fast when you do have a pop like that. So April 3250 calls, they paid how much for them? $1.45. And they collected for the 35 calls, because you'll note that they also sold the 35 calls, 79 cents. So how much did they pay in total? Well, let's see, 45 cents plus what? 21 cents. Basically, they paid about 66 cents, give or take, for these. Like the trade, the $2.50 spread for that price. Again, like it. It gives us a lot of upside for a little risk. And I would instead, however, buy the 30s and sell the 3250s. But that's just me. You guys have to decide how to trade it. Tonight after the bell, we have a free webinar. It is a Valentine's Day webinar. Unusual call activity training kit. All right. You want to learn how we trade options when we see unusual activity, sort of like what I just described? Well, join us for free. You've got less than an hour to sign up, though, because marketrebellion.com/register is how you do it. It is free. You don't have to register with a credit card or anything else, but you've got to register, and we will even send you a copy of it in case you can't make it with us right at the market close, 4 p.m. Finally, Google. We made some money on a Google put spread the other day, and now we are seeing Google calls being bought fairly aggressively. Stock's 92.37. They're buying the 105 calls in March. So those calls are a little more than a month into the future. So call it 30 some odd days into the future. Would you buy those 105s? And as you can see, they bought those and sold the March 14s for, 20 cents or give or take. Would I do that? Yeah, but I wouldn't buy a way out of the money call. It's asking the stock to do too much, in my opinion. It's a cheaper shot, but I'd rather be more at the money and sell upside calls against it as we get there. So that's what I'm going to do. Again, I can't pull the trigger for you. I can't tell you that I'm your financial advisor and this is what you need to do. But I can tell you, been trading for 41 years. This is, in September, my 42nd year in this business. So that's how I've survived this long. Trading the at the monies against the out of the monies. Bang. All right, folks, that's going to do it. If you could join us, I would encourage you to do that. If you can't, still sign up, because again, we will send you a copy of that video that we will record at 4 p.m. Eastern time today. Just go to marketrebellion.com. You'll see everything there, how to get started, how to register, everything. Marketrebellion.com. See you at 4 o'clock Eastern time today. Bang.